Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in and things in the housing market are fixing to get much worse and panic is fixing to spread. We already have a little bit of panic going on now, but what I'm saying is once that panic starts to spread across the nation, that's when price decline will really spiral out of control. And so today we're going to go over the Redfin housing market update, and I want to challenge you as a viewer, and I want you to answer the question: is Redfin saying things and manipulating data to make the housing market appear much stronger than what it actually is? And even if you don't agree with me, even if you're a realtor that just says buy or a broker that is just trying to generate leads on YouTube, seriously, tell me, are they or are they not saying things and manipulating data to make it appear that the housing market is a lot stronger? So that's going to be your question for today, and here's where I want to start. This week's Redfin article is House Hunters Are Back as monthly mortgage payment post first annual decline since 2020. And I highlighted the date there for you guys, August 22nd. So the question is, they're saying again, house hunters are back. Demand is back, you guys. The housing market is strong. You better buy. My question is going to be, what data are they basing this on? Are they just saying that? Or do they have data backing that statement up? Let's start with their own leading indicators. And you guys can see right now that interest rates are down week over week and also day over day. When we look at the daily average and we look at that year over year daily, that's down almost a full percent, meaning that's 10% of purchasing power. So we got roughly 10% of purchasing power, and look at mortgage purchase applications down 8%. Redfin home buying demand down 8%. Google searches for homes for sale down 8%. So far, personally, again, I'm just asking you, but so far I don't see any information here that suggests that house hunters and demand is coming back. Let's look at another data set. When we hop over real quick to Mortgage News Daily and we look at interest rates and their mortgage purchasing composite, well, take a look here, you guys. First of all, we peaked, okay? We peaked around April, May of 2024 at a 7.22% interest rate. Above that, you see demand at that time, and that is their index, was at 141.7. Fast forward to today, interest rates have declined 73 basis points or 7.3% more purchasing power as a result of those declines. But now, guys, it's showing that the daily rate is 6.49%, and yet above that you see demand, the composite index, is lower than it was when the interest rates were higher. It's 137.7. So again, what I'm saying is, so far, at least, the trends do not demonstrate that just because rates went down, and they went down a decent amount, there's not a whole bunch of buyers on the sideline that are going to come into the market and save the entire industry. And the reason that is, the price is just too much, at least in my opinion. When we look at supply, and remember you guys, supply is a measure of total inventory and demand. And what you guys see right here is that actually is going up. We now have 3.6 months of supply. And if you look at that week over week trajectory, again, it's going up, suggesting that inventory is increasing at a faster pace as demand. Now, I also noted on the top there that supply was 3.7 months back in 2017 and 2019. No mention in that in their update. I think it's important to understand that as far as supply, I mean, we're right there, guys. The question is, on all of those data sets that I showed you, did you notice any demand picking up? Is Redfin just saying that? Are they saying that demand is there just to make it appear that the housing market is stronger than it actually is? Let's keep digging. Let's now go to price cuts, because surely if house hunters were back and demand was back, then price cuts would go down week over week. Let's see. Not only is this up, okay, so this is up week over week, which means sellers cannot sell their homes for what they're listing it for, and there's a whole bunch of them. In fact, a record number of sellers are starting to understand that in order for them to sell their house, they must cut the prices. And look at this, guys. The other interesting thing is, this is a new all-time record high, and Redfin left that out of their report. So they left out the new all-time record high completely out of the report. So again, I ask you, are they just using things to make it appear that the housing market is stronger than it actually is? I want to point out one other thing on that chart. Now, I pointed to where it says revised. Now, remember, you guys, we hit a previous record of 7.1%. But when we look at this, it's going to 6.9%. It's clearly a record. They're not mentioning it. And the reason why, they revised downward the last two records. It appears so far that Redfin is revising the data to change the narrative. And I'm sure you guys are starting to notice a few $100s here or there can completely change your perspective and the narrative in the housing market. Are they covering up what's really going on into Redfin? Why did you leave out the historical high price cuts that are going on right now? It doesn't appear that demand is coming back, but let's look now at another leading indicator, days on market, because surely if demand is coming back, then days on market would be going lower. However, when we look at the updated days on market, week over week, days on market is going up, again suggesting that house hunters are really not going back into the market, that Redfin is just saying things and they're willing to sacrifice their reputation, manipulate us, and revise their data so that they can continue to push their narrative. That's what it looks like to me, but regardless, days on market is going up. We're now at 34.7 days on market. That's up 5.5 days year over year. So sellers are having a lot more difficult time selling houses. We have the price cuts, we have inventory going up, days on market going up. And remember, meanwhile, payments on average have dropped $250. So on average, payments are lower by $250. But the payments are still almost $1,000 higher than they were 3 years ago. People remember, I want to get into listing data, but do me a favor, guys, comment below based on the data that I showed you so far. Do you think that they're just saying things to continue the narrative that the housing market is a lot stronger than it actually is? Maybe you don't feel that way. Maybe you do feel that way. But either way, if you guys comment and you share your opinion, please explain why. I always find it especially interesting when people actually explain themselves because I learn, and I'm sure a lot of other people do too. Jumping on over to active listings, you can see that we are barely over 1 million listings, sitting at 1,540,000. Now, it is interesting to note that we are up year over year 18.2%. But take a look at how close we are to 2022. We don't want this bad boy going down. In fact, we want it to keep going up. So keep your eyes on that. If a panic happens, any type of foreclosure wave, any type of speculation meltdown or selling, you're going to see that sucker shoot up. Because remember, you guys, the housing market is extremely emotional. And so when people start figuring this stuff out, there will be a panic, and that panic will magnify all of the trends that we see now. But regardless, we still have over 1 million active listings. Let me show you one data set that is a little concerning, which is new listings. So even though we have a 4-year high of active listings, understand that the actual listings that are coming to the market is low. Now that's going to be low for a few reasons, primarily because a lot of current homeowners have a low interest rate, and it's called the golden handcuff effect. So we want to keep our eyes on this data set. Take a look right here, you guys. We're still up year over year 3.5%, sitting at new listings of 90,330. And look at how close we are to 2022. So we didn't have that mid-year increase like I was hoping, but we still hit 1 million active listings. We still have inventory growth. Demand is still crushed. Consumers are wising up. Let's go over median sales price. And before I show you how they've revised last week's data, because remember, last week they said that home value went up last week. But the thing is, guys, this week they revised that data, and it does not show last week went up anymore. But they're not going to issue a statement that's saying that they were wrong. So I'm going to get to that, but first let me show you where we're at this week. So according to the 4-week rolling average, median sales price until they revise this is at an even, suspicious, 390,000. Now I again put down the peak, which was at 396,124. Also, all the way to the left, you'll notice that we started the year at 361,273. So if we're going to end this year with year-over-year price decline, we have another $31,000 to lose. But right now we're down from peak $6,124. And not only that, guys, like I said, on average, in addition to houses being approximately $6,000 lower, mortgage payments are roughly $250 lower. So we have data now that is suggesting that the longer you wait, the better deal you get, like I've been saying for the last 2.5 years. But I've also been saying everything is about local markets. Use your subdivision, look for wedge, look for cash flow. If you find a deal of your dreams right now and you can afford it, you have a good job, you have your money saved, no consumer credit, you plan on living there for 15, 20 years, by all means do it. But be careful. Now, look at the arrow, that super long arrow that says revised flat, no increase that week. Okay, so you see that? They've revised that down, so it's no longer showing any type of growth whatsoever. And let me remind you what last week's article said. As you guys can see here, and I want you to remember this number, 389, 250. And look at to the right of that. This is the narrative. This is what I'm saying. This is up slightly from a week earlier. So again, remember, 389,250, that is up slightly from a week earlier, implying that the housing market is rebounding, right? Rates are going down, house hunters are back, the housing market's rebounding. But the thing is, guys, is they've revised that downward this week. And it's no longer 389,250, they revised that down to 388,750. So they can no longer say that last week home prices went up. Look at the date here, 8/11, you see that right there, all the way to the right, 388,750. I mean, absolutely insane. I mean, to me, when you're a data provider and you understand that consumers are leaning on you to get accurate information, whether good or bad on the housing market, one thing you don't do is continuously revise the data and miscalculate the math. And I've proven these things multiple times on my video. So it all goes back to the fact that it's you, the viewer, that need to empower yourself. You guys need to understand how this works. I have a free home buying class. I'm not charging you for it. Go watch it. I guarantee you're going to learn something. You're going to learn about how loans work, wedge, cash flow. But remember, you guys, you got to go hyper local. You got to go into the subdivision, and you really got to figure out what's going on. We cannot lean on these data providers. It gives us a roundabout idea. But when I see them swing a $200, $300, $400 up or down to shift the narrative, to me, I can't trust them. All right, you keep lying to me, I can't trust you anymore, and that is a shame. But again, maybe I'm wrong, maybe you guys don't agree. Are they manipulating the data and just saying things in order to create a narrative that the housing market is stronger than it actually is? I'm really looking forward to hearing from you guys. Other than that, I really hope you guys got value, insights, and perspective. And don't forget, if you guys want to battle the fraud, corruption, and greed, the petition is in the link. Check that out. And don't worry, you guys, Mitch and I are working on a forum to help people stay boxed in. So when it comes time to protest assessment value for houses, we're going to have an army, and we're going to knock those people down, and we're going to start getting fairly taxed, which I guess is actually just no tax, but whatever. My point is, thank you, and we are going to give back to you. We will grow together. And other than that, guys, if you're out there investing in real estate, you guys already know I wish you luck, and I hope you win.